This quarter report is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Hello and welcome to our reporting season investor spotlight, your shortcut to the results that matter. I'm Nadine Blaney. And reporting today, Beach Energy reporting a loss for the full year after taking a heavy impairment on its operations in WA and Victoria. But the oil and gas producer posted a $43.8 million net loss for the year ending June, with that non-cash impairment charge of $474 million due to near-term commodity prices. Net profit, though, was up 32% to $450.5 million, excluding one-time items. Sales were up 13% to $2 billion, and production was up 9%. Beach has declared a final dividend of 6 cents per share, double the level of its interim payout. Also, listed investment company Argo Investments has reported net profit of $259.8 million, up from $253 million a year earlier. Revenue lifted to $285.8 million, and its portfolio returned 13.3% for the year. Argo has increased its annual dividend to a record 37 cents per share, up 7% from last year, with earnings per share rising to 34.1 cents. Argo warning that geopolitical and macroeconomic risks remain elevated.
Oh, look, the company's in good shape. We've had 3 years of strong market performance. We've increased our profit. And, our franking balance is solid. So we think in the environment and, looking forward to what we think the portfolio will deliver, an increase in dividend was warranted and, we think is, more than sustainable.
And on Friday, ResMed beat fourth quarter earnings forecasts on strong demand for its sleep apnea devices. It's also forecasting higher than expected gross margins for the year ahead. ResMed booked net profit for the full year of $1.4 billion US, up 37% on the previous year. Revenue increased 10% to $5.1 billion US. Net profit up 30% to $380 million US for the 3 months to the end of June. CEO Mick Farrell says he's confident ResMed can keep growing sales of its respiratory devices despite the widespread take-up of weight loss drugs.
A great quarter in Q4, but more important than that, it was a great year. We just finished our fiscal year 2025 in June 30 and had really solid growth across the business.
ResMed has lifted its quarterly dividend by 13% to US 60 cents per share, increasing its share buyback scheme to $150 million per quarter. That's in US dollars. And here's what analysts are saying in the wake of those company reports. Morgan Stanley saying that RMD has delivered a better than expected result with FY26 guidance, resulting in upgrades to its operational forecasts. Broker sees favorable growth outlook for ResMed, supported by increased uptake in its addressable markets. Its overweight rating remains. And Citi and Ord Minnett rate the stock a buy. Morgan Stanley, meanwhile, says CSL, IAG, Woolies, Stockland and Telstra will be key to influence large cap positioning this reporting season. The broker says CSL is at a turning point. Investors are watching for margin recovery, guidance clarity. It also sees IAG facing scrutiny on sustainability of its strong margins and expects Woolworths results to be a litmus test after smaller peer Coles continues to outperform. Broker also sees Stockland positioned for a housing recovery, market focus on land activation and settlements ramp up. Meantime, it says that Telstra is facing questions around ARPU versus churn and the Infraco valuation, with a potential for an uptick in the dividend. And tomorrow we will be hearing from Credit Corp. Shares today off by 2.6% to $15.21.